All right, welcome back to 0.5% episode 11. In this episode, we'll be going over some trades that I completed with a gold miner ETF and then an inverse of the ETF. Hopefully, we'll get to another trade that I made, which was a really significant loss. I've made quite a few trades since I think the last video of reviewing some. I don't think I recapped Friday. And then we went into the weekend research, and I've had a significant number of completed trades since then. The progress is still green, but I had some pretty significant wins for myself and then blew it pretty much all by trying to continue trading after hitting my daily profit, which I think is a common lesson a lot of traders hopefully learn or frequently repeat. Greed is where it'll get you. So I had the really significant ones with the company we'll get into later. I think it was MLGO. And then I had some not as significant, but I still would like to review them, losses with the gold ETF, Nugget, NUGT, and the inverse Dust, DUST. So it should be a pretty interesting episode. There's quite a few wins since the last review, but I think there's more to learn with the losses, and I'm kind of embarrassing myself by putting it out there, but in return hoping holds me accountable to not make the same mistakes. And yeah, let's get into it. Hope you enjoy. All right, welcome back to 0.5%. This is episode 11, part 1. As I said in the intro, quite a few trades have happened since my last trade review video. All the weekend research was posted, and now it is April 1st. So what I think I'm going to do is I'm going to start with the tracker. You can see I logged in the trades completed on the 31st and the trades completed on the 1st. The amounts shown here are crazy compared to the actual trades completed. We jump into the tracker. See I'm sitting at an average trade percent of 0.17. But let's scroll down and take a look at some of these recent trades. So looking for the 31st, and this is the company I was talking about in the beginning that I got some significant wins with and then kept trading and lost it all pretty much. So first trade completed was a 3.69% for $261, one of the largest trades I've ever made. And then I was able to do it again, $225 for a 5.72% trade. And the crazy thing about it is after I made these two trades, I was so pumped that I knew I needed to relax. So I actually left my house, went for a drive, and when I came back, hopefully we can see it in the review, it looked like it was doing the same setup it had done the first two times. So I jumped in it again, but this time I took a $114 loss. Could have called it there. Still would have got out with like a $300 day. But nope, still wanted to try it one more. And I don't know if that's because of the setup. And then I just went long on it too. Didn't get out until I was down 6.94%. And maybe there was a chance to have set some stop losses, but this stock was trading so volatilely. I think for the day it was up 300%, and I knew it wasn't a company I was going to be willing to trade into a swing trade. So I had to take my losses once I got in there, because I don't know this company very well, and I wanted to experiment just trading something that is one of those to the moon days. So I started so well, and yeah, that's just how it goes. I should have hit my target, and then you literally closed my computer and, I don't know, left it somewhere and not come back to it, because I kept going. And if we look, so we ended here with the trade with dust. That was also a loss, 3 losses in a row. And then I was like, all right, I'm gonna call it. So for that day, the 31st, I got out of there with $17, even after those back-to-back 200 plus wins. Where I want to start today, though, is going to be reviewing some trades I've made with the ETFs Nugget and Dust. I've actually pulled up these on etfdatabase.com. So this is Nugget. So the Direction Daily Gold Miners Index Bull times 2 shares. And by the two times shares, what that means is this is a leveraged leveraged equity. You can see that here in the categories, meaning it's gonna be moving much more volatile than just the regular index, twice as volatile. So I was kind of curious about the holdings, and so this is the VanEck Gold Miner ETF. It's a little bit more than half, and then the rest is the dollar. So you know, as long as the dollar is not going crazy, then this portfolio is pretty stable. And gold in general is pretty stable. So there's not, in general, much volatility I would expect to be going on. But with the leverage portfolio, then you can get the volatility needed to make the trades. So I'm gonna go back to the profile. I don't think there's anything else here I'm kind of interested in. Anything else I want to know here? I don't think so. So I'll pull up now. This is the opposite. This is the Direction Daily Gold Miners Bear 2 times. So this is an inverse of the other ETF. When that ETF is going up, this one's going down. When the gold is going down, this one is going up. And you can see the index that they track is the Arca Gold Mining. I think this is here. Yeah, Arca Gold Mining Index. What's interesting about this, I since it's an inverse, I'm assuming, I don't really know how future trading or option trading goes, where you can sell short contracts, but it's kind of weird. I looked in the holdings of this one, and it just says the US dollar. But yeah, I don't understand that. It should still be holding the ETF. I don't know how that works. But let's pull them up on the charts. So this is Nugget. I've already thrown on my trades there, but I'm going to go to an overview so we can really compare them. Actually, let's make it even larger. A week? Let me go to a month. Oh, wow. Gold was so expensive back in 2012, 2011. That's insane. So maybe zoom in. And look at that. I think all these are dividends. Yeah, it's kind of annoying that they're on there. I don't know how to take them off. Can I get rid of those? No, I don't know. Zooming in. Man, gold might be on the run up. So I've got on here the 10 period moving average, the middle of the Bollinger Band's a 20, the red's a 50, and purple should be somewhere on here. It's probably, is purple on here? Or there might even be 200 of them. I don't know. 200 months of gold information. Anyways, I'm trying to see where we can see it best. I'm already halfway into this video. Let's go to the day. I'm just zoom out. Maybe we can see from 2000 or from the beginning of the year till now. So pulling that up from the beginning of the year, man, gold's been on a rip, or this portfolio has been on a rip. I'm not sure about gold in general, or remember the other half of the portfolio is dollar. don't know what the dollar's doing really. But so that's Nugget. This is bullish ETF. Let's look at now Dust. So Dust is the inverse, and zoom out to the beginning of the year. So we'll see here, Dust has been going straight down between the bottom of the Bollinger Band and the 10-period moving average. Nugget was going straight up between the 10 and the top of the band. So yeah, you can see they're just doing the opposite of each other. And the great thing about this is I'm going to put myself kind of on punishment for messing up those trades, and I might even make it worse depending once I start doing the review how big of mistakes I made. I think I'm just gonna start trading this ETF for now, because there's a lot of little things I'm learning. Like, for example, all of this volume candlesticks in the back of the moving average. Like, what does it mean when you have this first giant red candlestick and then you see it's the peak of the moving average? So I've said before, even though a moving average is coming down in MACD, the price can still go up. So when is that not true? I think it's when you have these red candlesticks. Like, if you have green candlesticks, and I don't know what it means when they're on top and bottom. I don't know. So I'm trying to figure out a couple things, but I'm starting to see patterns, which, yeah, I think that's the whole point, is we're just looking for trends. We're just looking for patterns. All right, 10 minutes in, let's jump into Nugget, see what I did for the day. First off, let's just look at the day. So we have a positive MACD, we've got a strong RSI, we've got all of our moving averages in order: blue, 10, 20, 50, 200. There seems to be some support or resistance that was here, and then it's now turned into support. So on the day, Nugget looked good, but as these are leveraged ETFs, these are not something I'm going to put myself in a position to hold, because, I mean, maybe gold, but I would never hold the inverse one, because you would expect gold to become only more valuable, which means the inverse one will only become more in value or less valuable. I don't know what the vocabulary is for it, whatever. All right, let's come down to the hour. So on the hour, doesn't look too bad. Maybe the first one was the worst, but we have positive MACD. Unfortunately, the 15 is under the 30. RSI is trending positively. We're sitting on that support. Let's come down to 15 minutes. So this looks pretty decent. So except for, all right, now we can maybe seeing some differences. MACD is already negative here. But this is what I was talking about, so check it out. So I just at the inverse, I was saying, when it's positive MACD, even though it's coming less deviated, it could still be going up. You'll see here it's negative and it's getting worse, but you have these green volume sticks underneath the MACD, and the price is actually going up. I think the last thing I bought might have been the best opportunity on the 15-minute chart, but it's still negative MACD. So I don't know, like, this crossover I think is pretty significant, and then this volume change from under MACD to above MACD. But all right, so let's look at these. Buy here, sell here, not bad. Buy here, sell here, not bad. Buy, or one buy, one sell, another buy, another sell. So this was the first loss, was coming down here. And then a bunch of buys that sell. Let's come down to the 3 minute. this is the minute period that I'm starting to become most fond of, because there's just too much noise in the 1 minute. Getting in and out of trades unnecessary because I'm thinking there's a reversal in the trend based on the 1 minute chart. From what I've seen, the 3 minute chart is way more reliable, almost on anything that I've traded so far. When you see a moving average cross into positive MACD, 15 above the 30, and then still positive but cross from 15 under the 30, those have like almost, from what I've seen, always been great plays. So looking at the 3 minute here, actually I'll just zoom out and try to point this out. So let's go back a little bit. So this is the 3 minute time frame. This is negative MACD. There is a cross here, and then look at the volume sticks. They've gone up above. So yeah, I don't know, I'm catching these patterns. I'm not sure what they mean, but I'll do some more research on that. But imagine if you bought here and then it crossed over here, you would have made a little bit of money. If you bought here and sold here, is that here, and then sold here, you would have made a little bit of money. Bought here, sold. Ooh, if you caught that one late, but you could have gotten out here when it started to look like it. But the 3 minutes seems pretty consistent. Let's move a little bit closer to the day. This cross was pretty nice. The cross is over here. Let's say you bought that fat jump on top of the middle of the Bollinger Band. And then this one, the come down might have been too soon. Because remember, this crossover is still a negative MACD. I think it's got significance to it, but I don't know how to compare that significance to some other crossovers. I'm gonna have to look at it some more. And then this crossover, so that would have been right where the green's touching here. And if you would have bought in this one, yeah, you would have still made money. You would have made a lot of money, even though it retraced quite a bit. So let's look at this one where it crossed over. I think that's why I started buying in so much here. Starting here, yep, right when it's crossing over the 3, then I saw it come down, tap it for test, go back up to above the blue. So I bought in again, sold it here. And let's see how much that first one was for. Bought 2, sold here. So this was a 0.39% trade. Next one was from here to here, or 2 of them were back to back. So let's see what those were. A 0.8 and a 0.2. Why did I get out of those early? I think, so I got out of them early probably for a couple reasons. First off, MACD is still negative. Don't know what's going to happen. If I can make any money, I'm going to try to make it. And these trades are April 1st. I'm trying to make up for them stupid $400 losses I made. I'll take pennies all day. Just give them to me until something's certain. But clearly something wasn't certain here because I lost a couple times. This next one was pretty nice from there to there. I think that was a little bit larger one. Was it 0.2? So this next one, I lost almost an entire percent. And then I switched to dust because I thought it was going the other way. So it went here to here. And now I think there's been a reversal. You see, this is coming back down. There is a small crossover right there at 12.15 where I sold. And I think I panicked. So the 3 minute wasn't a good thing to get out there. It wasn't a significant enough cross, but I was just nervous going through here, and I guess it could have gone down more technically because the MACD is still negative. It wasn't worth the risk. Like I can't see everything to the right of the screen at this point in time, so it looks like it's going under. I'm already down pretty bad. Cut the loss. I came back in. These trades happened in less than 3 minutes, both of these next 2 trades. So let's jump down to the 1 minute chart. Okay, so bought here as it touched on top of the 200, sold, came back down, tested it, and sold. Let's see how much those are for. That would be these two. Uh, 0.1 and a 0.08. So really no, I probably bought at the top of this, or in the middle of this red, and then at the top of that one. So no meat and potatoes on those, but pennies. I mean, I will take pennies. It was $7 and $5. Like, it's not even pennies. Like, happened in how much time? 3:18 to 3:28, 10 minutes. $12, 12 times 6, just $72 an hour. If I could keep doing that for an hour, like, it adds up taking pennies. I'm here for it. But these next trades were a bit more significant. So I bought in here and sold there. Which one was that? This was a 0.13 for $8. And this last one was a 0.41 for 25. Oh, and how much time did that take? I'm on the minute here. So 1, 2, 3, 4. In 5 minutes, made $25. Not bad. But yeah, I'm coming up on 20 minutes, so I got to cut this video. And I think I'm going to jump into Dust next, and then we'll cover MLGO. I'll try to go quicker on that now that I've explained what an inverse ETF is, which 2 I'm working on. Part 2 shouldn't be so long. So thank you for watching.